Welcome to Winning Wall Street's Money. Please take this moment now with helping me. Click here, subscribe. Next, click this bell. Next, ensure to click all. This helps you receive a notification when I posted my next videos. Next, click this thumbs up button after every time you watch my video. This pushes it up in the engagement ratings and means it will be suggested to more people, therefore is likely to get more views to my YouTube channel. I really appreciate that. I also have a Patreon page. Click show more. Scroll down. This link here, my Patreon, click on it. Select the membership. With this membership, you'll get access to all this information. Very good content. Tuesday, October 12th, 11:05 a.m. New York time, discussing stock IPOs. We'll look at the current year of a few, as well as last year, or compare them to the S&P 500 index. That's the go-to index that institutions and individual traders should be using to compare their performance with for their single stocks or any financial instrument you're invested in. So there's two grids. On the right side is the SPX. Again, that's a cash index for the S&P 500. Trades from 9:30 a.m. to 4 p.m. And we're looking here over two-year duration. Each candle's a week. And same on the left. It's set for 2 years. Each candle's a week. It may not have 2 years of history because some of them only started trading late this year, as well as some late last year. And I'll let you know when we get in. A little brief about stock IPOs. Companies may be in business for 10, 20, 30 years, and they may never decide and never get listed on a stock market. It's their choice. Company may be out there for 20 years, 5 years, and they may all of a sudden choose to go listed on the stock market. Understand? So some of these companies on the stock market have history in business, and some are rather new. They might only be in business for a few years, less than 5, less than 2. So don't look at them just because it's IPO. It's not necessarily a brand new company. It's been around for a while. And to become listed on a stock exchange, there's several reasons why they do that. One of the reasons often is to raise capital. They need money. They don't want to borrow money, or they may not qualify to borrow money from banks, credit cards, family or friends. So just because they go on a stock exchange does not make it a good company, good choice of investing in. Okay. First look at RLX. That went IPO this year. And on the left is when it started listing. Yep, since then, it's traded lower, near the lows. That's not a good investment. First here, S&P 500 is much closer to the highs of the year. Next, Alpha, Foxtrot, Romeo, Mike. Look at this, big 180. IPO here, went lower, and now it's almost at highs, but the highs are here. Well, the S&P 500 has been a steady up with minor pullbacks. Next, Papa Oscar Sierra Hotel. It's near the low, another terrible performer. PLTK. Also, here's the IPO, went there, IPO. And look at that. We're about mid-range off the low and the high. Not a good leadership. Next, Sierra Hotel, Lima, Sierra, also way below the highs of the year. Look, here's the high for the year. And when it did open up, it went from here up a little bit and had huge sell-offs, underperforming the index. That's not good. Be better off buying the S&P 500. Delta Sierra Papa. Wow, almost near record lows. Look at that, from a high of $69.16 down to now $12.50. Terrible. Bad investment. Romeo, Alpha, Sierra. Wow, the high was $59 the first week it went IPO, and since then It's under $5, which makes it a penny stock. Yep, the Security Exchange Commission, SEC, and all the stock exchange that it regulates says any company that has a stock under $5 is considered a penny stock. Yep, that's not good. Many institutions, mutual funds, hedge funds, only invest in stocks that are $12, $15, $30 or higher. They're not looking to buy and hold stocks that are that low price. And many good financial institutions typically only want to buy stocks that are $23 or higher. They don't want to have them low price. Again, there's not much interest in the institutions by those, other than day trading for those, not for buy and holding. Bumblebee, Bravo Mike, Bravo Lima. So the first week of IPO, since then, it never went back up there. It's near the lows, not good. Romeo, Bravo, Lima, X-Ray. Yeah, from the IPO, from here on the left, all the way up to $103.87. That was it. Roll over. Yeah, back around $71.02 now. Weakness. X-Ray Mike. Oof. That fast takeoff from the IPO and then to roll over. Still underperforming, almost near the IPO opening price. That's not good. Oh, again, look at this on the far right. That's leadership. Oscar, Sierra, Charlie, Romeo. Wow. Since the IPO, just declined miserably. Well, Coin, Charlie, Oscar, India, November, Coin. The company is an exchange. It's exchange for cryptocurrency. It's like the New York Stock Exchange, the NASDAQ is an exchange. The CME is an exchange, which is for futures. But Coin is for cryptocurrency. Yep, it's like a casino. It should be making money and doing outstanding. No, it's not. Look at this. It's almost near the low. Terrible, terrible, terrible. Yep, just like the financial instruments they manage on their exchange are bad. Oh, oh wow, just terrible. Not a good investment. $429.54, first week of the high. Since then, declined hugely. Not good. Uniform, Oscar, Uniform. Sorry, Yankee, Oscar, Uniform. IPO. Tight consolidation there. Had no trend determination until it had that pop and then roll over and made a new low for the year since IPO. Terrible. And Robinhood, another broker that deals with cryptocurrencies and stocks and options. But again, it's a broker. Look how bad it is. There's the IPO that week, took off like a rocket ship and rolled over that same week. Not good. Thin trading range, not much interest in there. Nope, bad performer. Toast, a brand new IPO. Tango, Oscar, Sierra, Tango. Since the IPO, it's made lower low and still below the IPO price. The IPO price was here. It's trending now. That's bad. Let's look at, so the takeaway, most of these are underperforming their initial IPO date. That's bad. Lack of history, lack of companies. Go to some 2020, Airbnb. There we go. IPO, ran up, rolled over. Now it's doing a retracement of this year, still below the high of this year. Not good. There's better performance than this. DoorDash, Delta Alpha Sierra Hotel. Wow. Strong run up, and now it's a retracement. See if we even can get back up there. Still a lot of whipsaw on that. Romeo, Kilo, Tango. Financial mortgage company. New lows. Wow. Look at that from the IPO there. Rocket ship took off, consolidation. There, big run up. Yep. $15.16, heading lower. Not looking good. Snow, Sierra, November, Oscar, Winter. Similar to the other one I showed you with that retracement. Yeah, I've had that run up last year, retracement this year. Whereas on the S&P 500, it had a upward move for this year. So again, look at this, doing inverse, declining from the beginning of the year. This go up. Well, not looking good. So Whiskey, Mike, Goff. Wow, all-time new high, outstanding. Here was the IPO last year, the only one that's taking off. And look, it's outperforming the S&P 500. S&P 500 did a retracement. It's not an all-time high. Or Whiskey Mike Goff, all-time high, outstanding. What is the name of this company? Warner Music Group. I wonder how much they charge per music for the consumer. Lima, India. Nope. Struggling, not good. X-Ray Papa Echo Victor. Way below the high of last year. Still struggling. And Uniform. Yep. Still below the high this year and below the low of last year. Below the high of last year and this year. Not good. Yeah, so this year never took out the high of last year. Not good. Look at this. We're way above on the S&P 500, way above the high of last year, where this IPO is not. Golf Delta Romeo X-Ray. Oh, look at that. So we're below the low of this year and below the high of this year and below the high of last year, right down here. Nope. Look at, we made a lower low than last year. This is not good. So one would expect better on this one, Airbnb, but still it's around the range, the high of last year, but slightly below. So you'd be better off again to invest it in the stock indexes, S&P 500 or the Dow Jones or the Nasdaq 100. Yep. And you can also find out these stock IPOs, free information. Whenever they come listed, they have to disclose, and you can see it. Go to the Securities Exchange Commission website or contact investor relationships of any of these publicly traded companies and ask them to show you where on their website or on their perspective of what they're using that capital for they raised. Be surprised. Maybe it's using to acquire another company. Maybe it's using to pay down debt. Maybe it's being used to pay bonuses. Maybe it's being used to hire more labor. It'd be interesting. You may have an interest to know that. It's good information. Thank you, as always, for spending just a little bit of your time with me. Let me know what you thought about this video, and please let me know what you want to see next. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on my PayPal link. You can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe.